Hello again. Now, the active versus passive investing debate has rumbled on for many years. In most parts of the world, including here in the UK, active still holds sway. But are we starting to see the beginning of a global trend away from active towards passive? Well, two sets of data released in the last few days certainly suggest that attitudes are changing. Both reports come from the United States, where support for passive investing is strongest, but both are significant nevertheless. The first set of data comes from Standard & Poor's. Broadly, says S&P, most passive funds, including exchange-traded funds or ETFs, are beating actively managed funds on performance. There are a few exceptions, but generally active funds are underperforming benchmark indices. The S&P report also suggests that passive funds are winning out over the long term. And let's face it, most people do invest for the long term. What's more, it's not just actively managed equity funds that are tending to produce disappointing returns. It's a similar story with bond funds. For example, the Barclays Long Government Index has produced higher returns than nearly 94% of actively managed long government bond funds over the past 5 years. Now, faced with evidence like that, it's no wonder that increasingly investors in the US and in other parts of the world are looking towards cheaper, passive-style investments. So what about that second set of data? Well, that comes from a survey by Cogent Research, which was commissioned by the asset manager Invesco. Cogent surveyed 189 American financial advisors and found that 19% of them use all passive portfolios, which isn't far behind the number using only actively managed funds, 24%. Most now use a blend of active and passive funds. It was a very different picture just 10 years or so ago. In the UK, as I mentioned, passive still hasn't fully taken off yet. Nevertheless, demand for low-cost investments here is on the increase. Furthermore, the Retail Distribution Review, the upcoming overhaul of the whole charging structure of the financial services industry in this country, is only going to focus people's attention even more on what they're being charged and the sorts of returns they get for their money. The active-passive debate really is starting to take an interesting turn.